Hi there, a very good morning, good afternoon to all of you, depending on wherever you're hearing me. This is Simply Stocks, and I'm here with another video after a long time, probably a week, 10 days. But basically, I wanted to share with you about this market, which has hit a new high today. So it is now at all-time high again after consolidating for the last couple of weeks. Now we are back at around you can say 21,900 going towards 22,000. So we'll discuss about the markets as well as one stock from the small cap space that I believe is consolidating and may perform extremely well over the next 6 to 9 months. We'll discuss that. Even from a long haul, it looks pretty good. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should that with their own due diligence and research, and I'm not in favor or against any company that I talk about. I'm not a portfolio advisor officially, and that these all discussions that I have on markets and stocks is purely on the basis of the experience I have had with the market over the last 12 years, 10, 12 years being in the market, being a retail investor. So I discuss that and I impart that knowledge, whatever I have gained over that period. So whatever financial decision that you take, kindly take that on note that it is laden with market risk, and kindly do consult your financial advisor before pushing that button and buying into any asset class. Now, before I talk about the markets and this company, here's a small request to kindly support me on Patreon. Once you do that, it help me grow the channel, help you also ask me questions, seek out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, which I keep updating after every 2 3 weeks. Will make better videos on YouTube and analysis on different companies. You get analysis on global and domestic economy, and you have all your queries, whatever queries that you'll be having. I'll be more than happy to answer that. So in order to understand about the market, let me take you to the trading view website. And so the markets are at 21,900. These are some of the stocks that I keep tracking on a daily basis, and there are many more other watch lists. So let's take that down. So this is the Nifty. The Nifty is currently at 21,000. So it closed at, if you see here, it has closed at somewhere around 21,900 or so, somewhere around that 21,900, 894 to be precise. But it made a high of 21,928. So at 21,900, how are the valuations? So if I take 21,900 and we take the valuations of FY24, we are trading at exactly 23 times. So currently we are at 23 times earnings, and I believe that this could stretch to 25 times at the best. So there could be a situation where the market could go up 7 8% from here, but that's the best case scenario. But the way things are looking, since it is extremely positive and we are seeing how the markets are behaving, I won't take a bet against the market going to 25,000. So where do we have the support? That's the basic question. If somebody wants to get into the market, say on Monday, then where will he find support on, or from where he would say that, okay, let's sell and don't buy and stay put and wait for a correction. So a deeper correction may happen if we break these levels, if we break 21,000. So now the support is around 21,000. That's 1,000 point lower. So the market could go down 900 points and still be in a very big bull run. So there could be a situation where we may go down 300, 400, 500 points, and it is needed. The way the RSI is shaping up, as we see here, it's around 70 now on a 1 year basis, the RSI. So I won't be surprised if we correct to 21,000. If you look at the 10 DMA is around 21,650. So there could be a chance that we may correct again towards 21,700 and then even to 21,000. But eventually by the time of the elections or just before that, around that period, we could be headed towards 24,000 levels. Yes, I will not be surprised if we go to 23,500, 24,000. I have been talking about it, and if we say 24,000 based on 952 rupees, that's 25 times. That is expensive, but that is not extreme, you can say, greed or extreme expensive, etc. Because FY24 earnings would come in, say, if we reach 24,000 by February end or early March, then March 24 earnings would have come in by now. By then, December earnings would have come in, so March would have been priced in. So we are looking at FY25, and based on FY25, even on 24,000, we are not extremely expensive or anything. So I believe that there could be a situation where the market may go up 2,000 points from here, but not in a staggered manner and not immediately, like it would just shoot up in a couple of weeks to 24,000. I think there will be correction. I think one needs to be cautious. If you have a time frame of 6 months, then it's okay. Till elections, it's okay. 3-4 months, and you are in profits. Two things you can do, and probably start booking profits the next week and then buy again on dips, or you can just stay put till elections and probably then sell around that period when 24,000 comes in, because there will be corrections, but I don't see this market again going below 21,000. If you see here, then the low here was 21,087. So 21,000 is a strong support. Next day we made a low of around 20,980. So that's it. So 21,000 is a strong support. And if you look at the 50 DMA, that's around 20,880. If you see here, 50 DMA is around 20,880. This should go up in the next 3-4 trading sessions. This should go to 21,000. So again, 50 DMA is your benchmark to really sell and say that okay, the rally is over for the time being, and in the shorter run we could see a massive correction or decent correction of 6 to 8% from that level of the 50 DMA. Otherwise, I don't think this is going below 21,000. Somebody who has bought here, even who has bought here in late December, should be good at holding the stocks, because the stocks may not fall that much. Some of the stocks may fall, but other stocks which would come out with decent earnings, and if you have good quality stocks, they might correct 5 to 8%, but eventually go up and make new highs, and that is exactly what has been happening. So that's about the market. The stock in question that I wanted to talk to you about is Gensol Engineering, and very interesting company. From 300 it had gone to 1,950 levels, and then had corrected and has been doing well on the numbers front. The only thing here is that the management promises a lot and delivers less, so kindly take that on note. Otherwise, I believe that the company is doing pretty fine, and for me, this is an interesting company. So we are at Screener, and the company currently, the market cap is 3,200 crores. A disclaimer: I have investment in this stock, so I have a trading position in this stock. So that's a disclaimer, a clear disclaimer in here. So Gensol Engineering, 3,200 market cap of 3,200 crores. Currently, the PE seems extremely high at 100 at the moment, but we'll discuss about the numbers, and then we'll come to the charts as well. So basically, this is into providing electric vehicles and making commercial electric vehicles, and they have been going big in there with huge investments. If we come to the numbers front, on the quarterly front in September, they did around, on a consolidated basis, they did 200 crores versus in last year September of 81 crores. So that's how the numbers have catapulted from around 17 crores of operating profit to around 50 crores, that 3x. And profits, although net profit has gone up a little bit from 8 crores, around 8 crores, it has gone to 11 crores. The reason for that has been you can say depreciation which has kicked in because of all the inventories, or all the, you can say, expansion that the company has been doing. But basically this game is about the sales thing. Sales have been continuously growing. So in March of 2022 they did 160 crores. In March 23 they did 393 crores, and we are expecting that this year this is going to be pretty good. So I believe that December, the way sales have grown from 145 crores to 200 crores, if we take a trajectory of say 20% quarter on quarter, and that is exactly what this company is doing, even better than that. If you say 200 crores, 145 from 145 to 200 crores, that's a clear jump of 38% quarterly. So if we only take say 25% jump from here, then they'll do 250 crores supposedly in December, and in March they'll do better because in February that they're going to set up another factory for the EV production of the commercial vehicle that I'm talking about, those autos, etc., and the cabs, different types of cabs, and they have started with cabs in Delhi as well, the blue smart cab. So if they start the production by February, they have been talking about it for the last 1 year, then the March quarter would be even better. So I believe that, let's just say a 25% growth on that. So they'll do 325, 575 plus 200 plus 145. They could do around 900, 920 crores of sales for the year, which is a tremendous performance, and which I feel can happen. They have done 350 crores already. I think they can easily do from 350 to 9 sorry 350, they could easily do 550 crores in the next 2 quarters in terms of sales. So around 900 crores of sales is pretty much possible. If we take 25% you can say operating profit margins, then 230 crores will be its you can say operating profit. Now 230 crores of operating profit versus an operating profit of 58 crores last year, that is the kind of jump that we are looking at in FY24, and that is why I'm pretty bullish on the company. I believe that it could do extremely well. Now on 50 crores of operating profit, it did an EPS of 3.15. So that is, let's just analyze as to how the numbers may pan out. That's my point. So they are doing around 6.4 percent. Okay. So from 50 crores of operating profit, they did you can say an EPS of 3 rupee 3.15. That's a percentage of 6.4. So 6.4% EPS is from the operating profit. I'm not saying profit, but EPS is around 6.4% of the operating profit. Now if they are going to do 230 crores, then your EPS could be close to 14.7 rupees. Taking that into consideration, an EPS of 14.7 rupees, a price of say 850 currently, we are not that expensive. So we are trading at 57, 58 times earnings and not 98 times as it is being said here. Again, on 920 crores of sales, we are trading at the moment. If that happens, again, that's a disclaimer, these are all projection, 3.5 times sales and not 5 or 5.8 times sales. So 3.5 times sales. Now let's just understand how the PE has been for the company over the last 3 years or so. That's a good average to take in. That's around 90. Now if I'm saying that the PE, when I said that the EPS will be around 14.7, then at around 850, we are saying that we are trading at 58 times, where the average PE for the company for the last 3 years have been around 90. So there's a decent upside possible, in my opinion, on the stock, based purely on the basis of the projected numbers on both the fronts. Even if we take market cap to sales, things are not that expensive. 5.3 times is its average. Currently it is trading at 5.8 times, and when I said 920 crores, then we are trading at uh, around 3 times or so, around 3.5 times. So we could go up to 6 times, 5.5 times, based on FY24 numbers. So it will be interesting to see how December numbers pan out. Numbers should be good in terms of, you can say, balance sheet. Yes, there is some debt on the company, but things should work out well, because the company is in a real growth phase and in an expansion phase. So cash conversion cycle has dropped from 255 days to 35 days, which is extremely positive in terms of shareholding pattern. 65% is with the promoters, 2.5% FIIs, then DIIs have also got into it, and there are large investors invested into the company, as we see from here. So overall I see decent upside over the next year or so. But even from a 5 year perspective, this is a small cap company that could be looked at with a small percentage of your investment. That's what I feel. I believe that the stock should end up doing decently. I won't like to put any targets, but you can analyze this. It has come down. So technically speaking, if we see a 1 year chart, it has come down from its highs of around this was something around 944. So from October, when it hit 944, it has come down. And if you see very closely on a daily basis, when it is coming down, the volumes are extremely less, and then there is some buying on decent volumes, and then again consolidation and buying on decent volume. That just tells you that there is appetite of buying at lower levels that is creeping in. So you have immense support around 790. I think 790 is a very decent support. So it has not done much in the last 3 months, 6 months or so. So if you see from here, from these highs, even from that 940, it is still lower. It's not making new highs, etc. From 944, it dipped to around 700 level, 708, and from there on in, after a decent correction of around 250 rupees, 240 rupees, it has come back. So 30% correction took place. If I say how has been the correction, so 944 minus 708 upon 944, this has been a good 25% correction, and now the recovery is taking place. So very decent correction is taken place. RSI is not at oversold or anything of that sort. It's around 58 on a yearly basis. So in 1 year time, it could do extremely well. Now what it needs to do is to take out this recent high that it made of around 910 and then 908, and once it hits new highs, then we are up and away. And probably if that factory comes up in February, we could see that move taking place. So that's what I feel. Your support or your stop loss is slightly lower at around 750. If you want to keep 50 DMA, then that could be your stop loss 790. So it's not far off, but it could dip lower from there. So what you can do probably is have a stop loss from the breakout level of a recent breakout level. So let's take a 3 months chart and we'll have a better understanding. So if you see here, it made a low of around 712, and then in this rally it made a high of so here the high was 850 and 812 was the low. So around this level, from where it really took off, so this low was around 800. So your stop loss could be 800 in my opinion if you buy here and then trade from there. But I think 750 is a reasonable stop loss to keep on a longish time frame if you have more than 1 year time frame, etc. So 790 could be a very decent stop loss, which is your 50 DMA. So overall speaking, this looks good. I feel that this is a company again I'm invested into, could do extremely well in the next 2 3 years if they execute what they are talking about in terms of sales and profitability. So a very decent company to look at. Kindly do analyze, disclaimers do apply, do consult your financial advisor before investing into these kind of companies. So this was my video on the Nifty and this stock. Kindly do subscribe to my channel, hit the bell icon so you can get my videos straight away when I post it, and support me on Patreon. Thanks a lot for watching.